Welcome everyone to the introduction to Minoma Analytics. In this video, I want to give you a brief overview of what Minoma Analytics offers. Let's get into it. First of all, I want to make a couple of notes. First thing is that this platform is not for beginners. With that, I do not mean that you have to already be a very profitable trader or a profitable trader at all, but you do need some foundational knowledge of technical analysis of trading. And if you're just starting out on your journey, if you're just learning trading, if you do not know TA yet, have at least some sort of system in place. And again, it doesn't have to be a profitable system, but at least some form of foundational TA/a system, then I would highly suggest you go figure that out first, go learn that first, as this tool is focused more on intermediate and advanced traders. I figured I would start off with this to not waste your time in case you are new. If you're new and still curious, then of course feel free to keep watching. But I have noticed that, and I've designed it as well for more intermediate and advanced traders. So if this is you, great. And if not, it's also not a problem, but I would highly suggest that you go get some foundational knowledge of technical analysis first. Because I've noticed that the people who come in and already have foundational knowledge or some system and then apply the statistics to that system or to the TA knowledge they already have, that has the best effect, so to say, right? That pushes people from being like possibly from unprofitable to profitable, because it's like the extra confidence they need, or it can make them even more profitable because they already have a winning system, but this gives them even more insights in which trades are winners and which trades are not. So that's what I wanted to start off with. Second of all, this video will give you an idea of what Minoma Analytics offers, but it's by no means an extensive breakdown. So by the end of this video, you will have a more or less of an idea of what we offer, but given the more complicated nature of this product, it is impossible to break down everything in detail. And it's not the purpose, because if you're watching this, you're probably trying to get some information on what exactly it is, if it's right for you. So I don't want to make it too long, but you have to understand that it's impossible to get a short video in and explain everything in detail. So there's probably going to be things you're still confused about. That's okay, because this is just to give you an idea of what is present. If you're interested and you want to know more, there are extensive tutorials available in the free Discord. These tutorials are available to everyone. So just go in there if you want to know more, if you really want to dive into details, because everything is covered in detail in these tutorials that are available to you in the Discord. So if you want to know more, just go there and realize that this video is not gonna cover everything in detail. You are probably going to be a bit confused about some concepts. That's okay. If you want to know more, go to Discord. This video is purely meant to give you an idea of what we're doing at Minoma Analytics. So just to really quickly show you that, if you go to the Discord, you have the tutorial section here, also available if you're not a paying member. And here we just find everything broken down in topics, foundations, the time-based statistics, the distance statistics, summary pages. Everything is broken down into great detail. We have video tutorial series, written tutorials, and you can just follow along whatever you want to, if you want to read or watch, whatever you want. So if you want to know more in detail, then you can go here. But for now, we can dive into what actually are, or at least the quick overview of what Minoma Analytics offers. I give you a tour of the dashboard itself. I just want you to understand a very simple concept that is the foundation of everything. Let's take a daily time frame as an example. We know that the daily time frame has a highest price point and a lowest price point. So we have the daily high and the daily low. What we look at Minoma Analytics is that we have a little bit of a twist to that, and we look not at daily high and daily low, but we look at P1 and P2, which stand for pivot 1 and pivot 2. If the daily high is put in before the daily low, as you see here, then the daily high is P1 and the daily low is P2. So it simply means P1 is either the daily high or the daily low, whichever came first, right? And then whichever came second is P2. So if the daily high got put in before the daily low, then the daily high is P1. And if P2 got put in after the daily low, if the daily low would have been put in before the daily high, then the daily low would have been P1. But in this case, it is P2. So for example, right now, we see that P1 is the daily low because it was put in before the daily high, right? The daily low was put in before the daily high. Now, we're just talking about the daily time frame right now. We have this on other time frames. We have the weekly time frame where we can see that the weekly high is P1 because it was put in on Wednesday, and the weekly P2 was put in on Thursday. The weekly low was put in on Thursday. Hence, the weekly low is P2. We can do this on the 4 hour, for example, as well. We see the 4 hour low was put in before the 4 hour high. Therefore, the 4 hour low is P1 and the 4 hour high is P2. Now, why are we using P1 and P2 instead of just the high and the low? It's because P1 and P2 are more actionable. They're more actionable. They give more actionable statistical insights than gathering just daily highs and daily lows. In any case, what are we trying to do at Minoma Analytics? Well, Minoma Analytics, as of this date, we have two main types of statistics that help us with determining whether these pivots in real time, right? So while it's developing, so this can obviously, this can change. This is the current daily low and daily high. But what our aim is to determine what the likelihood is of these holding. So to determine how likely is this pivot to hold for the rest of the day, and how likely is this pivot to hold for the rest of the day. If we're able to statistically say that this is unlikely to hold and this is likely to hold, then we have our bias, right? We have a bias, we know which direction to trade in, we can find TPs and so on. To do that, we gather two kinds of statistics. Time statistics, which focus on when do pivots usually get put in, right? Are there any high probability times in which pivots get put in? And distance statistics. And distance statistics try to answer in which area relative to a starting point, in this case daily open, do pivots usually get put in. And based on that, we can determine whether the current pivots are high probability pivots or low probability pivots. And again, we do this on multiple time frames, but in order to show you that, we're just gonna go into the dashboard right now and dig into it. So when you first open the dashboard, this is what you see. It might look overwhelming at first, lots of data. I promise you it is not. Once you get to know what's the data that's being presented, it is pretty easy and intuitive to understand. But this is the main overview of the dashboard. We're looking at data for P1 and P2. We're gonna dive into this. First of all, I want you to know that here's all the assets you can choose from. So we have data on different assets. This one we're gonna dive into. You can select the weekdays you wanna look at the data for. So for example, we can select Fridays or unselect Fridays and so on. And this is the date range in which you wanna calculate all the statistics. So everything is pretty dynamic. But first of all, let's explain what we're looking at here. The easiest way to explain is first do it like this. So we can select high, low. What we see now is daily highs and low put in per hour of the day. So this shows that hour 0, and hour 0 is UTC plus 0 time zone, so just UTC, which is the universal daily open, puts in a daily high 15.6% of the time and the daily low 14.5% of the time. And you can do this for every hour of the day. We can also go to 3 hour blocks where we see it right here. So 24% of the time P1 gets, or the daily high gets put in between 12 and 3 a.m. and 25.3 the daily low at the same time. And we can also look at the same data for sessions, where you can see that immediately that London is a very unpopular time to put in either a daily high or the daily low. But as already mentioned, we don't look at daily highs and daily lows. I mean, it's available in case you're interested in it. But the thing we do here is look at P1 and P2 as mentioned. But I just want to show it first because this will make a lot more sense in that way. Let's go to this graph that will make it more clear. So we have the P1%. In this case, it's now called pivot 1%, pivot 2%. But basically what this is showing is the same thing, but rather than looking at how often does this put in the daily high, it shows how often does it put in P1 and how often does it put in P2. So what we can see here, this column is right here. You can see probabilities of P1 being put in per hour. You can see that most often it's put in at the start of the day, and then logically it gets less as the day progresses. And P2 gets put in, and P2 obviously doesn't get put in a lot at the start of the day. And as the day moves on, you see that this is like the high probability zone to put in the P2. And I see that this is now 0, but this should be 10.2%. Only spotting this now. So that's a very easy way of understanding what is going on there. So what this is showing is that for the data we have selected, so in this case, let's select all the data, which is, yeah, pretty much from late 2018, we can see that 32% of days put in a P1 at hour 0. And for example here, 9.6% of days put in a P2 at hour 16. We can do the same for 3-hour candles, where we see, for example here, that 50.7% of the days put in a P1 between midnight and 3 a.m. So this makes it immediately way more clear why P1 and P2 are used. This is not the only reason, but you can see it's more actionable, whereas at first, it was the daily high, the daily low, but well, both of them are like 26, 25%. So it doesn't really give you much to go on other than that, it is a higher probability time. But if you know the first pivot, and then there's other ways to determine which one is going to be the first pivot, but this is way more actionable because it immediately gives you a lot more insights, or a lot more actionable insights. But you might be wondering to yourself now, okay, nice, we have all these statistics, 50% is still on the edge, what are we going to do here? And this is something I like to call time-adjusted filtering. So there's something you have to understand, and for example, right here we have P1 at hour 1, P2 at hour 13. It's good to note, by the way, that this is pulled automatically. So this green thing right here shows you that P1 is here, the green check mark, and P2 is right here. And if we, this makes more sense if we go to the lower time frame, or it's the same time frame but at the hourly aggregation, we can see P1 hour 1, P2 hour 13, and indeed P1 hour 1, P2 hour 13. Now, the thing I wanted to show is something I like to call time-adjusted filtering. What do we know? We know that this is P1 and this is hour 13. We know that hour 1 is the daily low, and we know that hour 13 puts in the daily high. That means that we also know that none of these candles here are gonna become the daily high or the daily low. So what this data is showing, that 50% of all days put in a P1 during these 3 hours, right? During this 3-hour block. But we also know that these time blocks can no longer put in a P1, nor can they put in a P2. So what we want to know is say, okay, or what we can say is, well, what if we remove the days that have a pivot during one of these hours? If we remove those from the calculation, right? So this is saying 50% of all days. Well, what percentage of days put in a P1 if you remove these right here? Because they can no longer become P1, right? So in other words, what you could look at is, based on the hours that can still become a P1, how often, and based on the hours that can still become P1, is either this or one of these here, right? Because in the future, you can still become P1. So based on these hours that can still become P1, based on all the days that put in a P1 during those hours, how often does this block put in a P1 or a P2 for that matter? And that's what I call time-adjusted filtering. So we can press that, and then we see, based on all the possibilities that are left, 74% of the time, this block would put in a P1. So you can already see that this is way more, already giving you quite a bit more of an edge. I do have to say already, jumping ahead, I really like to prefer or prioritize distance statistics and use time statistics as confluence. It doesn't matter too much now. This is probably more of an advanced thing, but I do like to prioritize distance 1, time second. I really like time statistics, but I do think distance statistics are more powerful. But I'm getting ahead of myself. We'll get there later. So this is how it works, and you can do this for all different assets. So for example, if we take this one right here, it will immediately recalculate everything. This is the current P1, current P2. Obviously, these calculations, the statistics are different. For example, we could look at Solana. So you will get a very good view of when the P1 and when the P2 are and what the time adjusted probabilities are. And I want to be careful with probabilities, as you will see, or saying probabilities, as you would see in my second video of the Minoma Analytics Foundations. You see me explaining that there's actually no such thing as probabilities, only estimated probabilities. But that's something for that video. Either way, you see how this works, right? You see how this works, and this is something we can do on all time frames. And in this case, we're looking at the daily time frame at the 3-hour level. But we can also, for example, look at individual hours. Do the same thing, right? The time adjusted filtering. You can do it on the weekly time frame. So for example, here we can see which days of the week usually put in a pivot. Let me just do that. And we see that most of the time Monday puts in a pivot. And another good thing to note, like we can press this and we can see what the progression is lately. And we can see that lately Mondays have been putting in a lot of pivots. This is the moving average value. If I say the last 15 days, we can see it's very high because Monday has been putting in a lot of P1s. But not this week as it happens. P1 on Wednesday, P2 on Thursday. We can see this doesn't happen often, right? So it's against probabilities, but we know it doesn't happen often, but it does happen at times, and that's fine. And we can see here that therefore the time adjusted probabilities are not so decisive at the moment for the weekly, and it's possible. And we can do this on every time frame. So for example, if we go to the 4-hour, we're now on time adjusted. Select the right block. We can see that the current P1 on the 4-hour is during the second block and P2 is during the third block. And then we can see that both of them are not the most high probable for this this particular 4-hour block. So for example, there's actually quite a big difference between 4-hour candles. So this is between 12 and 4 p.m. As you might know, there is a New York Open in this time, and that's why these are actually not that conclusive. If you, for example, go to 4 p.m. until 8 p.m., you can see that, so the next 4-hour candle, that these statistics are quite different, right? There's way more of an edge to put it in during this block right here. But same here, you can also put time adjusted filtering for these, and then you see what the probabilities are for whatever options there are left. So that's pretty much it for the time-based statistics. Obviously, you're free to mess with the date selection you have. Maybe the last good thing to say is that here you see last P2 is how many days it has been that a pivot or an hour put in P2. So if you see, for example, that P2 is putting during hour 7, and you know that P1 is going to hold, that's obviously the given, but we have ways for that, methods for that as well. And you see that's been 497 days since hour 7 put in P2, then that's a very high probability target, right? Then you want to target P2. And finally, this column right here and this column right here, they just show what if there's any recent changes. So this shows that recently it has been happening 3.5% more than 29.9%. And recent is whatever you put in here. So in this case, the last 100 days, 50 days, but if I put it here, it's the last 100 days. So it really depends on how recently you want to look. Basically, this just shows you if there's any recent trend changes happening, and for that, obviously, you can also look at this chart. But that's pretty much it for the time-based statistics, right? So you can also choose which day of the week you want to look for. So for example, this would only show what's happening on Mondays, in case you would be curious if there's any difference on Mondays. I would be careful. You actually see that hour 0 puts in a lot more P1s on Mondays, interestingly enough, especially lately. So you know that's something you could uncover. But I would be careful with selecting single days, because you are getting a lot here. You see how many data points we're working with, and it is becoming a lot less. But so far for time-based statistics. Now we'll move on to distance statistics. So the distance statistics show something else, and this part is going to be very difficult to explain thoroughly in this video. So if you're confused on this part, don't worry about it. It's completely normal. But I am going to try to give you a little bit of an overview of what we're doing here. Basically, what we're doing with this chart is that we're trying to determine the likelihood of P1 holding or not. So it's important to understand that P2 can become P1 if, say we have a P1 here and a P2 here. What can happen is that, you know, if we take out, or I might have already explained it, I actually forgot, but if we take out the old P1, then what happens is, for example, this daily low was the P2 when this was still the P1. But after we take out that P1 here, this daily low no longer comes in second, right? It no longer was put in after the daily high, but before the daily high. That's why this becomes a P1. So what we're basically trying to do with this chart is estimating the probability that this will happen. And what we do for that is, what basically this is how far from the daily open usually the first pivot gets put in. So what we see here is this distance right here is what I'm talking about. Again, there's extensive video tutorials on this, so I'm just going to go over it really quickly, but I just want to give you a little bit of an idea of what we're doing. But you see here the distance from the daily open to P1 right there is 0.46%, and basically this is just a collection of all these distances for every day on how far that the daily open usually, or how far the P1 usually is from the daily open. So you can see here already that most often P1 is actually quite close to the daily open. So that's what we do there. And what we can basically see from the data and what you can read. So for example, here is the P1 got put in negative 1.07%. Then you can see in this area, so you can put that in, or it gets automatically put in if you want to. But what you can see here is that 46.1% of days put in P1 further away. In other words, 46.1% of daily P1s are put in within this zone, and 53.9% of daily P1s are put in within this zone. So you can see it's quite close to the daily open. Now, what we do is, since we know that P2 can become P1, right? So in this case, if this would happen, this is P1. So what we're basically doing is using this data to say, well, what are the odds of that? So for example, you know, it's good to know that if we know there's a low probability for this P1, P2 flip to happen, so for this to happen, then we know there's high probability P1 will hold, right? So if there's a low probability this will get taken out, then obviously there's high probability it will hold. Now, what we're doing with this is, for example, say we have P2 at this distance. So again, P2 can become P1 if we take out the daily low. And if that would happen, then this would be P1. So we can ask ourselves, okay, how often does something like that happen? You know, that we have P1 put in that far from daily open. And what we can see here is that only, because you have to understand that price is energy, right? So we have this starting point here, and then we move up. Basically, what we can infer from this is that the way we can look at it is that only 10.8% of days put in the P1 this far from daily open or higher, right? So only 10.8% of days came this far. That's how you have to interpret it. So only 10.8% of days put in a P1 that came this far from daily open, because you have to understand price is energy. It needs energy to move up. And then it needs energy to move back down to take out that existing P1 in order to make this P1, right? So in other words, what we can write from it is that this would be a 10% event, because only 10% of days would have enough energy to move price this far up and to tank it back down again, right? So in other words, only 10.8% of days put in the daily high 3.91% above the daily open, so this is here, before taking out the daily low again, right? Because that would make the daily high the P1. And therefore we can conclude, well, actually this is a very low probability, and this is not, we can infer from that there's a low probability this would happen. So that's how we use this data. So right now we actually have, so what we see here, for example, is that Bitcoin right now has the current P2 2.4% above the daily open, and we can check this. So here's the daily open, 2.4% above. There's some filtering being applied here to make the statistics more accurate based on which hour of the day, but this is out of scope for this video. Watch the tutorials to see what that's doing, but basically what it gives a more accurate statistic based on which hour of the day puts in a P2. But basically what we can see that only 33.3% of the days would put in a P1 this far above the daily open around these hours. That's also what is taken into account. That's the filtering. So if P1 gets put in around these afternoon hours, how far is it usually? If it gets put in around the afternoon hours, then only 33% of the days would see a P1 this far. So not the highest and not the lowest. I would like to see lower personally. And you can do this for all time frames. So for example, if we go to ETH, then we see that Ethereum is now negative 0.08%. So ETH is actually in a very high probability time. So what this is showing is that, you know, if it's high, there's no confidence that P1 will hold. If it's low, there is high confidence P1 will hold, right? So that's what we saw in that earlier view here, right? This is a very low value. That means that for this to be P1 is a rare event. If this is a high value, that means it's not a rare event. Therefore, if this is low, we can confidently say this will most likely hold. If this is high, then we can not confidently say this will hold, right? So this is how we're using it. And again, you can just go over all the assets, but you don't have to go over all the assets. We have an overview of this. We'll get to that later. So this is actually a good one. So for example, Rune, the current P2 is 9.3% above the daily open, and we can see that for the flip to happen would be 2.4% occurrence. So this is a very, very low probability. So we can say with a very high degree of certainty that P1 will hold. And what you can do then, for example, just to name it, so we see P2 at hour 7, we can go to the time-based statistics of Rune. So we know that P1 is very likely to hold. And we can look here, P2, it's been 58 days since P2 was put in during hour 7, and time adjusted 1.9% time adjusted probability. So then you can conclude that, okay, at least from a statistics perspective, P2 puts in or is a very low probability pivot. So this already gives you a little bit of an idea of how you can use this interchangeably, right? These time and distance statistics together. But I don't want to dive too much into the application. I just want to give you a tour of the platform. So just to move on to the next part. Because again, if you want to have a deep dive information, it's all in the tutorials, guys, all of it. So the next part we're going to use here is this graph right here, and what we use that is to determine the likelihood of P1 to P2, or for more displacement, so for P2 to be taken out. So here we have what we use this for is to kind of determine, okay, what is P1, the likelihood of P1 holding, and if it's high, then we can use this one to determine, okay, what is the likelihood of P2 holding. And the way we do that is that what this showed is the distribution of total distances from P1 to P2. In other words, I have a graph for that somewhere here. So basically here we have P1 as the daily high, P2 as the daily low. We can see that the total displacement, right, so the total move from the daily high to the daily low was negative 3.41%. What this chart is showing is simply the what the total displacement per day are, right? So you can see here, for example, that we currently have 9.7% distance between P1 and P2 on Rune. Well, I'm on Bitcoin, so let's go to Bitcoin. So on Bitcoin, we have 3.2% distance between P1 and P2. Oh, as you will see here, right, 3.2. And what this basically is saying is that 79.8% of days or positive days, because we're now looking only at positive days, right? Where P1 is the daily low and P2 is the daily high. 80% of those days have more displacement. So if you know that P1 is likely to hold, then you can conclude that P2 is unlikely to hold, because 80% of the days would move further ahead. And that's why this determining if this P1 is likely to hold is so important, right? Because now we saw that at least from time-based statistics, this is more likely to hold, this is less likely to hold based on time statistics. And also on distance statistics, there is a small edge right here, but 33 is not something I would normally go on. I would like to see it a little bit lower, so I wouldn't say this is too convincing yet, but I mean, it really depends on your own thresholds, right? But what you can see is that if you have this as a low value, that means P1 is likely to hold, and if you have this as a high value, that means you probably need more displacement between P1 and P2, because historically speaking, 80% of days had more displacement, right? So let's look at an example right here as well. So this was a good example on Bitcoin, where we saw that this value was relatively low, like 26%. So only 1 in 4 days would see a flip happening, right? So to take out the daily low, because only 26.9% of days move 2.11% above daily open to put in a daily high before taking out the daily low again and making daily high P1. So that's unlikely. And we can see that 81.3% of the historical days have more displacement in between P1 and P2. So in that case, we can determine, okay, P1 is likely safe, plus we have P1 at hour 0, which is high probability, P2 at hour 8, which is very low probability, if you go into the statistics. So if you know this, then you can say, okay, this is safe, right? This is safe because of this, because of the P1 hour, because you have N, it's the high probability time to put in a pivot, and it's a good distance, right? And this is a bad distance to put in a pivot and a low probability time. So you have all these things together, and then you can say, okay, then I do think it's time to move further. And this is exactly what happened. So you can see later on, we did get that move further up. And this is exactly how the benefit of it, right? Because if you know these things, if you know how likely that this is likely to hold and this is unlikely to hold, then you have your direction. You have your directional bias for the day. You can apply this to all the time frames that we have, but in this case you could apply, and it's actually a good point to mention, this is not a replacement for your TA, right? I do want to work towards it, and I'm getting closer and closer, and you can already take setups purely on statistics alone if you would want to. But I do think it's very good to, this is where you meet your TA, so use statistics to find the setups, and then you can use your TA. So for example, in this case, you've decided, okay, well, it's very likely that it will go higher, and then you can use the TA to find entries, or you can just, because you can also use P1 as invalidation if the retracement is deep enough, right? But that's also more advanced stuff. For now, it's important to know, I think you will understand that if you know what the likely direction is, that obviously going to give you an edge over the market. So we've discussed all these things, and again, you have this for, you know, all the assets that are in here. So you can just switch around with those. But the thing is, there's a lot of statistics, and it would be nicer if there would be a way where you can just quickly see for all assets what's going on, right? Well, for that, we have another page which is called the summary page. So if we go to the summary page, what you will see is a collection of all of the main statistics we just discussed. So what we see here is that, for example, Rune, the distance between daily open and P2 is now 9.3%, and only 2.4% of days would take out P1, right? So the lower this is, that's why this is ordered. Basically, this is an ordered list where the assets on top have the highest probability of holding P1, and the assets on the bottom have the least confidence, right? Doesn't mean there's a 97% chance of taking out P1, but we cannot say confidently that it will. So to make that clear, what we're looking at this point right here is this statistics that we just discussed, right? So this is the distance page, and we have that statistic right here. Well, that's on that column. Then we have this column, which is basically the other statistics we discussed, right? So here you have P1 and P2, the distance between P1 and P2. And then good to note that this simply shows bullish means that P1 is the daily low and P2 is the daily high. And this showed what the current retracement level is. So for example, if we have rune, there it says 0.7. What that means is that in between, if you pull a fib in between P1 and P2, then the current price is at more or less 0.7. You can see that is the case, right? So 0.78, almost at the 0.8. And the reason that's there is that if you have a high probability setup, you can see if there's a play to be had there. So essentially what you want now, if you know that if this is low, there's high probability for P1 to hold, and this is high, there's a low probability for P2 to hold, and combine that, you can press this, and then you get the time-based statistics as well. So these are the time-based statistics we looked at for rune, P1 hour 0, P2 hour 7, and this gives you the time-adjusted probabilities for those. But basically what you want to do, the process here, or at least if you're looking for good continuation plays, this is one of the use cases. The main use case, as of this point, I would say, is that the lower this percentage is and the higher this percentage is, the more likely price is to continue in this direction right here. Right? Because if this is low, that means there's low probability of taking P1. If this is high, there's a high probability of taking P2. And this is, bearish means P1 is a daily high. So in this case, this would be a good setup link, very low probability of taking out P1, high probability of taking out P2 or having further displacement. We're going into the bearish direction. So there's a high probability price will continue bearish. Now, one way we can do this, or at least make it simpler, what I always do, is that we can apply filters. So for example, I can say, well, I'm only interested in assets that have less than 25% historical probability of taking out P1, right? So this less than 25%. And I want to have assets that have more than a 60% probability, whatever you want, of taking out P2. And in this case, these are the assets you are left with, right? So all these assets have a low probability of taking out P1 and a high probability of continuing further. I can select these, and I can then look at also what their time statistics are. And then I can start doing and then I can go to the charts, right? So this is where you see you don't even need any TA to spot highly likely directional biases. So for example, now we have identified compound as an asset that will most likely continue going down, right? You can also see that on the time-based statistics here. And only then would you have to go to the charts and see what price is looking like, and then start doing your TA, right? See if there is an entry. Usually at the middle of the day is a good time to start looking for entries. For now, what I would see here is that it's looking quite okay to start looking for an entry, taking out that daily low, right? Although there's more ideal setups, like for example, hour 15, it's not too bad, but preferably you would see, for example, P2 during hour 8 or something. Those are usually very low probability, depends on the asset, but usually they are. But in any case, you can see here that you just get a list on the day of assets with a statistically probable direction. And you can do this on all other time frames as well. So for example, here you see that the same thing, but then for the current 4-hour candle, in this case, nothing shows up. And this is because there are, this is why. I was just looking, why is this? Because it's 4 p.m. and the new 4-hour candle just started. Therefore, there is no data yet. So the data is being generated. Same obviously for the 8-hour candle. Yeah, so we cannot look at those other time frames just yet because it will only start generating once we have some price action to work with. Obviously the current 8-hour candle don't have anything. But here, for example, you see also on the weekly which assets have a strong probable direction. You can see that most of them are still, with high probable direction, still bullish. And then there is another page. So we have this process right here, right, where you try to look this to be as low as possible and this to be as high as possible. Basically what we have in a time frame page, a multi-time frame page, MTF, that does this for you. In this case, nothing is really, there's not a lot of biases. Right now there's not a lot of bias. Obviously the 4 hour, 8 hour and the 1 hour just started, so there's no bias for that because there's no data yet. But what it basically does is it then maps this into a bias. So if this is really low and this is really high and the direction is bullish, then it will, for example, say this is a strong bullish. I don't want to get into this too much because that's just out of scope for this video. Again, I'm just trying to get you familiar with the offering here. But basically what this is a simplification to determine, you can put in your own thresholds right here, but it's a simplification where the process we just went through, where you just look at all the assets that have this low and this high, you can use that, or basically that's being done here on the background and it's being translated into a bullish signal, an exhausted bullish signal, strong bullish signal. So that's basically just what's happening. And the reason why I put that here, or we put that here, is because this is obviously, it's pretty clear, but if you want to do this for an asset over multiple time frames, it would be nice if you have a simpler way of seeing this. So for example, say you identified this compound trade that we saw. So here it's a bear signal because it meets probably meets one of these thresholds, but it's a bear signal. Then at the very least I want the lower time frame to not be strongly bullish, right? Because then I know I have to wait. In this case undecided, obviously, because we just, there's no clear direction because we just started, but that's why I like to do this. Otherwise I would have to go to compound and go to all these different time frames and look at those individually. Whereas now I can just very clearly and quickly see, okay, this is bullish, this is all undecided. In this case, there's not much going on, but you know, it is very easy for me to see those different kind of statistical biases. Because again, this is no signal. I want to repeat, this is, if you think you can just use this page and just say, oh, I'm just gonna short when everything's strong bear and long when it's strong bull, I would highly recommend you not to do it if that's like your idea. I really want to emphasize this is not a signals tool, and I think it is very essential you understand the statistics that lie underneath it and that you have a fundamental understanding of TA. And then this is just a simplification for you that you can work with, right? So it definitely works, but you do have to understand what's underneath it. And in this case, it's looking very sad. Normally, I promise it looks better. I mean, if you've seen the website, you've probably seen the screenshot of what's on the website. See that right here, this looks a lot better, right? So sometimes the chart looks like this, where you just see strong bull all over the place. And then, you know, if you see something like this, then you know there's a very high likelihood of going higher for the day. Right now, this is not what we have though. So right now I know to do nothing and sit on my hands because price is doing nothing. And that's exactly what's happening because we have a very involatile environment. So I know that was a lot to digest. I want to thank you for watching it. I understand that some things might still be confusing, that some things probably still are confusing. I want to once again say that all these things are being explained in way more detail in the Discord. I've already shown it, but I want to show you once more, just that, you know, just so you know, you just go to the Discord, start here, and then you can see here more information on the time-based statistics, distance statistics, summary pages, right? So if the distance, now you understand what's here, you can just see all the tutorials. You have the video tutorials. If you go to the tutorials, you will see clearly what's being taught, what's being covered, the summary pages, right? So if you, for example, want to know now how those biases are informed, I have an extensive tutorial on it. Also video tutorials, right? This is written, but then you can see, okay, how are these biases really being formed? So again, if you want more information, that is definitely the place to go. But for now, this is quite a, I have to say, extensive superficial coverage of the dashboard. I hope you got a little bit wiser. If you want more information on it, again, check the tutorials, come in the Discord, ask me any question that you want. But I hope you see the value of Minoma Analytics, the value of knowing whether P1 and P2 are high probable pivots or low probable pivots. And hopefully I will see you on board. Thank you for watching and catch you in the Discord, hopefully.